Hey everyone, I just wanted to make a quick video on breaker blocks and just explain a little bit about them, how to use them, and essentially what they are. So a breaker block in theory can be a supply or demand. Let's say we have something like this going on and price just dumps and there was no interaction in this zone whatsoever. More often than not, if price went right through it, the market will return and test that area again. Because there was no interaction to buyers and sellers, essentially what this becomes now is a supply zone. Now, a breaker block can be used to form a trade off of, or it can be used for the market to create future inducement. So like right here, I would go down on a time frame. If this was a 15-minute, 30-minute, or a 4-hour breaker block, I would have no problems taking a trade from this area, as long as it's with trend. Now, what I would be looking for is either a reaction here on the 1 minute or the seconds, and I would likely break even as quick as possible. And the reason being is the breaker block is sometimes used to create future inducement for the move in case the market needs more inducement, and it'll come up higher. And usually this breaker block will stall price long enough, induce people into the wrong side of the market, and then what it'll do, it'll come up and then the real move happens. So we really have no way of knowing whether the market's just going to tank off the breaker block or it's going to use it to create inducement. I take a trade off pretty much any valid breaker block I see. I treat it as any other supply or demand zone. It's no different whatsoever. On the flip side of things, if we have a market that's just going up and a market just came right through here, you had a supply zone here that did not have any reaction, and this supply now becomes demand. It's very important that there is no reaction. When I say there's no reaction, I mean the candle went right through. So if the market came up here and did something like this and it kind of played around and then it went through, this is no longer a valid zone. Your zone would likely be this now and this, and you would not use that breaker block. This push through needs to be clean. There needs to be no reaction. So on the flip side of things, we come back here. We would look for a trade on the lower time frame and we continue on up. Now, just the same way we explained the supply side of things where demand becomes supply, the breaker block can do one of two things here too. It can be used to take a trade-off, or it can be used to create inducement for the POI below. Again, we have no way of knowing what the market's actually going to do, so that's why we have trade management and we get our risk off as quick as possible, whether that's breaking even or that is taking partials, however you want to do it. But essentially, that is what a breaker block is. So we'll just go on the actual charts and have a look-see here, and maybe we can kind of show you guys how to use it and what we look for. So this is current price today. I have a few breaker blocks marked out. And essentially what it is you're going to want to find the pivot point that did this. And your breaker block will be right here. But do you see how price came right through it? There was no, the candle did not tap in, then go up, then go through it. There was a clean push right through. That is a requirement for the breaker block, and you'll pull the pivot. You won't pull any of these up here. It's always the pivot point. And what's special about these is we know the market will likely return here, whether it's used to create inducement and the market plans to come up here and then go off. That we never know. What we do know is we can safely take a trade off this, and at the bare minimum, you target this low. So if we just look at this on the 1 minute side of things, here's our initial tap into the breaker block. There is likely a 15-second or a 5-second reaction in here. I'm not going to go down to that because we'll lose this chart. I don't think the seconds rewinds that far. So we won't worry about this entry. Usually if we just wait, we get a second entry. So we did come retest this area, and we got a retest here. And if we just zoom in and look at this closely, we had a last sort of demand was this wick here, and we came right through it. You have your little bit of inducement right here, and usually we put our order just above the inducement, and this would be my order. Now, this being GU, you got to be pretty generous with the stop loss. Depending on your broker, your spread is likely anywhere from 0.3 to 0.6. That's pretty normal for GU. So and this is a wiki pair. So what I like to do is cover this high wick, and then I'll probably add, take like a 3.9 pip stop. It seems very large and a little bit surreal to take that, but on this pair it really isn't that bad. It's pretty standard to have a larger stop loss, and at a bare minimum you could take this to run this low and take partials here, leave some on the table or close it in full. Totally up to you. So that's breaker block scenario number 1. Whoops. Let's go take a look at a couple more breaker blocks I marked out here. So here we have another one again. You can see we have 2 areas. Now, here you might be wondering, why is this not a breaker block? If we actually look at it, you did have a little bit of a reaction. It started throwing wicks. If you went down on the lower time frame, something like the 5 minutes, you would likely find some sort of reaction to something in here. We can see there's a reaction, so we would not pull this zone. I like to see the pivot. So basically this, I want to see this zone, and I want to see no reaction every time. And these go either direction. Like I said, again, if there is a reaction and the candle didn't cleanly push through, this zone becomes invalidated, and we will not use it to take a trade off of, if this zone did have some sort of a reaction, that would become a zone we pull, and this zone's no longer valid as we pulled the fresher zone, and then you'd have your other zones. Alright, so now let's find this on the chart, and let's see what we got going on here. So we tap back into it here. Depending how you trade, let's see, got a top, we got a break here. You would likely take an entry here originally. Obviously that one doesn't work out. You'd likely take a hit on that one, which is totally fine. We get another break of demand in this zone here. And for GU, again, when I say you really want to give it room to breathe, this would be nothing wrong with, giving it that extra 0.6. Like, I have no problems taking 3-4 pips on GU whatsoever. So that'd be trade 1. If you miss that, this pair's not as friendly as EU, so you may or may not get another opportunity. Now, this is outside of trading hours, so I likely don't recommend getting in this, but you do have another opportunity here. We have another flip zone, reaction point, and what took out the reaction point, I would say something in this zone. And you would likely take another short opportunity from here if the first one didn't cover you. Again, this is GU. We want to be quite generous with this. So I have no problems doing 4.2, 4.5, 3.9, whatever. This is not a pair I try to go for a 1 pip stop. It's just, it's not realistic. It's a wiki pair. And if we look at the downside target on this, we'd be looking at running this low at a minimum. So if you're in the first trade, you're laughing. That one's probably gone at least, whatever, 10, 15R, maybe 12R. Let's see, what did it go? 18R. Yeah, you're doing quite well with that. Now, if we took this trade to the same area, so this happened during the London close, actually past London close. I likely wouldn't have taken this trade because that's outside of my trading hours, but there was a 10R there, and the trade idea is the same. Where's the flip zone? Where's the reaction point? What took out the reaction point? Yeah, so that's that one. I believe I may have marked one more, maybe two more. Perfect. So, this is a perfect example of the breaker block used to create inducement. So let's find this zone here, and I think I may have one more marked after this. The content of the breaker block and the whole concept is the exact same. It is essentially a supply or demand. Now this one here, you do get a bit of a reaction, but there's not a lot. When I say there's not a lot, like there's a little baby wick here, but I didn't see any long wicks like that, or half the block or anything. Like if I start seeing wicks like this inside the breaker block, to me that's a reaction. That to me isn't big enough to be considered a reaction. I would totally pull that block. So let's see if we can just find this on the 1 minute. Takes a bit to get there, but we'll get there. Here we go. So, in this scenario, I can tell you right now, you'd probably take a hit or two, probably a break even or two. And that's just the life of trading. So this was our initial breaker block here. We wicked right through it. We tapped into the next supply, which was your flip zone for taking out the last sort of demand. So you have a reaction point there. This supply caused it. So that makes that a very valid zone to trade off of. Now, just looking at this, so this is your last sort of demand. We would quickly put our trade on that. This one here would have broke even. Again, GU, very generous. We, have, what is that, 2 pips. I'd probably give it an extra pip. Maybe not quite that much, but an extra pip anyway. And we'd be aiming for this wick. Now, this one here, as soon as this low got run, I would likely be break even. So we would have broke even on that one. That's totally fine. You had a second tap here. Now, if we look over, if you're not sure, wait for something on the 15 to go. So we do get a bit of a disrespect of this 15, sort of a doji demand zone. We do get a disrespect of it. You can frame a trade off of it, or you can be, safe and wait for an extra confirmation. Myself, if I see that, I'd be in that trade all day long. So you have your last sort of a demand here. So you probably, this one you would take a hit on, and again, that's totally fine. So you give this one room to breathe, and you'd likely take a hit on it, and that's just one of those things. You broke even on the first one. This one you would take a hit on. It just didn't work out. So now at this point, after taking a hit on this, I'm going to go back and I'm going to look at this and be like, okay, what is the 15 realistically doing? So we have these wicks. This is my last sort of a demand area that took this high. So we tried to take a trade in here, which is this area here. We just failed. So now I'm going to be like, okay, if we're going to get involved because that one didn't work for me, I want to see something happen that tells me it's okay to trade. So we liquidated this bottom, or this top, I should say. We took liquidity. That's a good sign. Now I want to see these wicks go that gave us this drive up. So now you have a 15 chalk complete, and these wicks are this low here. So once this low goes, I'm interested in taking another sell. And what that did right there is a lot of people would have likely jumped in a trade as soon as this demand failed, and you would have jumped in here, and you would have failed ultimately, and you would have eaten shit on that trade too. And at that point, you probably would have said, I broke even, I lost twice, I quit trading for the day. So usually after my first loss, I will get a little more stringent, and I'll just sit on my hands and wait for the 15-minute to show me something. As we can see here, you have your break of, so you have your break right there. Oops. So you have your break down at this bottom. Let's actually delete some of that. And now we have this supply that did get liquidated again when we took these highs. So now you want to know that the market's actually serious about doing business. So now that we liquidated the top, we took this 15 low when this push down happened. I'll likely find the last demand we had, which is this wick here. It's a little bit of an ugly demand. Just for the sake of clarity and keeping our charts neat, we're going to make it a little smaller than it needs to be. Now, GU is a pair that loves the inside bar. The inside bar is a seconds entry. There will be likely a really clear point on here on the 30 or the 15 second that would show us this. You don't need seconds to be profitable. If you just get the inside bar indicator, a lot of times that'll guide you. And again, it's GU, so you're going to be very generous. You're going to put your order up here. I would likely just cover that whole inside bar. You got to be very generous with this pair. So what do we got here? That's 4.6. I would likely give it, 5.2, somewhere in there. Seems a little scary, but it's not bad for this pair. It's pretty normal. And again, I would be looking at running this 15 low before I took any profit. And you could probably, all depends on how many R's you're looking for. Let's see how many R's this is, just to run that low, because that's with order flow. So that's an 8R, which is a pretty decent trade. Now, GU spread being 0.3 to 0.6, you could probably take that, at the 25%. You'll likely have got tagged in that because spread would have been up here somewhere. So that puts your R's to 10R. Or you could reduce the R's, take the whole OB, get an 8R trade. Totally up to you, but that's just another way of using the breaker block. And if you look over to the left, the initial breaker block that stalled us here, it had created inducement, and we had taken it here. We had a failed reaction, came back up, liquidated the top once more, showed that we had intention of going down when we took this. Came back up, tapped this in, and down we go. If you're not sure what you should be doing, or you just took a loss, just wait, guys. Just wait for something higher time frame. Myself, I like the 10 to the 30 minute, and I flip between these time frames. I don't do anything below the 10 minute. I don't use the 5-minute time frame. If you use it and it works for you, that's totally fine. I personally don't. You have to do what makes sense to you, not what someone else tells you. But what I found is with the 15 and the 4-hour, I end up on the right side of the market a lot more often. So here we have, I actually took this trade, I believe I did. Yeah, so here we have a pretty neat area. Again, we had, we were very bearish. We had a change of character here. Now you can see we're holding the bottom here. We failed to react multiple times. Wicks to the downside. On the lower time frames, there would have definitely been a V-shaped reaction. No interaction here when we came through. So this is still a breaker block. So let's find that and see what it looks like here. Now, I don't know if my internet is being slow or if my computer is being laggy, but something's slowing us down here. But yeah, let's find this one last example and show you guys how it works going the other way. And the concept's pretty much the same over and over. And if it doesn't line up and you don't get your setup, just stay out of the market. It took me a long time to realize that not every day is a trading day. And as much as we like it to be trading day every day, what I found is if you force a trade every day, you just have to cover more losses. Some days, you know, there's 5, 6, 7 trades, opportunities, especially on EU. Other days, there's nothing that you should be in. So this is our breaker block here. So we did tap into it, clean push right through. Now here we tap into it, we get a V-shaped reaction. So this one you have to be a little quicker on your feet. I took this one, I remember this. And our last point of supply in our flip zone was actually up here. And ultimately it did not fail by much, and you had like a minute to get in. But it did kind of sit there and give you chances to get in. You also could have remarket executed on the next flip or put your order in. So I ended up taking this order on this wick here, as this wick to me is the cause of this reaction point failure. Our reaction point being this little doji that had failed to take the supply out. So we reacted there. Now we have a secondary flip zone here. So you have another, it's going to get a bit ugly, but you have another sort of supply zone here. And if you look at it really, this would be, again, you would have multiple ways of entering this. So let's just move my entry tool back. And option 1 would have been to likely take this whole candle or both of these candles and take the range. This being GU and being a wiki pair, you would have likely covered these lows, or at least covered, you know, somewhere down here, just because this pair is like that. The secondary entry opportunity would be this wick itself. I can guarantee you on the 32nd that there is a demand zone in here that caused the push up that actually broke this. And you did actually get a re-entry. Now, if you miss that, you do have, when this high gets taken, you have another flip zone and a chance to get in here. GU's not usually one to give you 3 entries in one go, but this is why I say you should only trade 1 pair, maybe 2. If you're able to do 3, that's great. I just got rid of my 3rd pair because I found I was missing too much stuff. So I'm down to 2 pairs right now. So that was entry 1 here, entry 2 here. You had entry 3 here on this wick. You had another entry here. Like, you definitely had multiple entry opportunities. And just by looking at this, when you see a momentum candle like this, you see rejection wicks. I will take that in the direction of the momentum candle all day long. So ultimately, that's all I wanted to show you guys. That is how a breaker block works. It's essentially a supply and a demand zone. And it's no different. It's safe to take a trade off of. The push has to be clean, and you just have to understand that some days you'll be able to take a trade off of it. Other days, it'll be just used to build inducement for the real POI the market wants to use. So it could have induced there, come back down, then go up. So it's always a possibility, and that's why we manage our risk, try to break even as quick as possible. But yeah, I feel like I've been talking way too long. We're going to end this here, and I will see you guys in the Zoom call shortly here.